can't believe I forgot to go over TSM today. I was gonna go over that. I had it in my notes and I just forgot to go over it. Okay, but anyway, but yeah, TSM. I actually like this. I like this put play. I like that how it came back to its level right here. I would like it more if it touched the 2 standard deviation Bollinger Band, which is at $89. I'd like it even more. Well, actually, 89 is perfect. 89 was the last floor, and if it treats it as a new ceiling, and boom, and goes down, and then all these people that went on. I also remember how I told you guys a lot of institutional traders, a lot of institutions were going long on dark pools on Chinese stocks. I didn't check TSM for those block trades. I might go back and check. But you know what? I bet you they did. Because it was like indiscriminate. It was like Alibaba, Baidu, all those Chinese stocks, all them Chinese stocks. It was all of them, okay? Even FXI getting lots of bids. FXI was like a huge, it was on unusual options. Huge block trades, even in the shares, huge block trades. So TSM is definitely in there. I'd like it more if it touched the 2 standard deviation Bollinger Band. We got a member who, Ari, she uses the what is that called? DeMark indicator. And she said today was a DeMark 9 selling signal. If you believe in such things, I'm not trying to make fun of her indicator or anything. No, I'm not saying that. Use whatever works for you, okay? If you use something and I may not agree with it, so what, okay? If it works for you and you make money off of it, keep doing it, okay? The number one job for a trader is you use what works and you keep using it until it stops working. Okay, so if it works for you, go ahead and do it. All right. I know that sometimes what I do doesn't work for some other people. Everybody's got their own style, their own temperament, their own psychological thing, and so certain trades are easier for certain people. I get it. I totally understand. Okay. But, again, that's just one indicator, guys. Okay, so you might want to also look at some other indicators too or other things. But for me, the reason why TSM looks pretty attractive is that if you look at its options positioning, especially today with the volume, there was a lot of puts sold, and a lot of the puts being sold were at this week 80. So, let's say after ECB, just like last month, after the ECB, let's say there's a flood of hedging and selling, okay? And let's say the market turns down. If TSM loses 80, all those people that are short those puts, they're going to panic because, again, remember that gamma effect I told you guys about? These, all these things that I tell you guys about. I invite you guys to go over my videos and re-listen to those parts. Those things are important. They come up often, okay? And so as the market goes down, if it goes down to 80, those gammas, because they're so close dated, they're for July 22nd. They only have 2 more days until expiration. Those gammas are going to explode. And so to manage that risk, most likely all those people that are short those puts are going to have to just cover those puts. They're just going to have to buy indiscriminately, whatever price, buy those puts back. So what happens when the market order flow turns to put buying? The market maker has to sell those puts. Selling puts is a bullish position, so they have to offset that by shorting some stock. All right. If we lose 80 any point before the week is over, I can see it being a panic point, and we see like a large wick down. If we lose 80, we're going way more down. Okay, that's why I kind of like it, because if you're right, you're gonna be right by a lot. Okay, if we lose 80, this thing is going to just like tank. There's gonna be a lot of putback. I can see it possibly going down to its 2 standard deviation Bollinger Band level at 75. That would be one hell of a move. So I was looking at the options chain. If it were me, the only reason that's stopping me from taking this trade right now is because I already have an FXI and EEM put positions, and they're in the profit. So I don't really like to chase once I have a decent profit. And I mean my EEM puts are, they're about almost 10% profit, which is not much, but I mean, it's more than what I thought actually. The FXI, my FXI is up about 20 to 25% as a whole. Okay, all of it combined. So it kind of feels like I'm chasing this. If it wasn't for me having those FXI EEM puts, I would get into this. But I am willing to get into this if it goes to 89 though. If it goes to 89, I'll do it no matter what. No matter, even if I have the FXI and EEM puts, I'll still do it at 89. It's very compelling, the risk to reward. Yeah. No, not necessarily. No, you don't. You won't get more or less because also you have to think about pricing and implied volatility. TSM has a higher implied volatility than an index. Indexes usually have lower implied volatility, so the options are cheaper. Based on volatility pricing. Yeah, because it's pricing in less of a move. Individual stocks, they price in bigger moves because they're individual stocks, right? So usually that price is already baked in. So if you look at like the current IV, for example, like let's just look at the September chain, okay? Look at like the September chain. Look at that. Look at how it's in the 30s and 40s, right? 30s and 40s when it comes to implied volatility. And then same expiration September. Let's look at FXI. It's more low 30s, but it's not like mid and high 30s like TSM. TSM actually has a pretty low implied volatility, but as you can see on the puts, it already gets into 30s and 40s, whereas just a little bit out the money on FXI. It's not. It's still 30. I mean, we'd have to get like to delta 6 to get into the 40s. Whereas with TSM, where do we get into the 40s? At delta 17, we started getting close to the 40s. Delta 7, delta 17, 9 versus like 5 and 6. So as you can see, TSM options have a little bit more higher implied volatility and it's natural because it is a individual stock. So so it's all going to be very relative based on that volatility, but because of the options positioning, because of those puts sold, that's just a phenomena for this week. If we lose that 80, I'm just anticipating. I'm not trying to predict the future. It may not happen, but maybe those people they won't sell those puts. Maybe they sold those puts for assignment. Then they wouldn't cover those puts. Okay, but if they do cover those puts, then we could see even more selling pressure, like a little mini panic. Remember I told you those pivot points, those big OI strikes, they could either work as reversal points or points where additional panic happens. Okay, so it continues that move. Okay, so it really depends on the order flow and do they cover? Do these people cover? Are the people that are short covering or not? That it basically boils down to that question. All right. And also too, and if I enter at 89, it makes risk management easy. 2 or 3 closes above that, I get out. I mean, and that could be a potentially very small drawdown. So as a risk management, I kind of like that. I kind of like entering the play at 89 and taking profits at 75. I was looking at the 80-70 put spreads for TSM for October. The 80-70. The 80-70 is pretty compelling. For now. I mean, that's now. Right now, it's still giving you more than 3-to-1 reward to risk ratio. All right, but if it goes to 89, we may get a similar pricing for 85-75. So either the 80-70 put spread or the 85-75. Depends on what the pricing looks like when it gets to 89. If at 89, if the 85-75 looks like it's 3-1 reward to risk or more, I'll take the 85-75. What is 85-75 right now anyway? Oh, it's at 319. So yeah, I mean, it's very, very possible. What's the delta on that? 44.21. So your net delta is like 23. 23.3. Yeah, very possible. It could be around 250. This spread might be around 250 if by the time TSM gets to 89, if it happens like soonish, if not much time passes between then. Yeah, very possible. This could be 250 by the time this gets to 89. That's pretty compelling. 85-75, and and our take profit happens to be where that short strike is. Oh, that sounds beautiful to me. That sounds like a beautiful trade to me. But again, the only thing that's stopping me right now, is that I already have FXI and EEM. That's the only thing. So for you guys, that might be different. Okay. Yeah. Well, I don't know about that, but I don't think TSM. Well, maybe. Okay, maybe. Okay, but yeah, but yeah. But again, TSM, I think, yeah, I think it's just, I think the reward to risk is very compelling at 89. To me, at 89 is where to do it. I know that the indicator, and Ari's a great trader, so I know she knows what she's doing. She's probably looking at other indicators as well. But just for me, just because of my already existing positioning, and that's why I said this, guys, from the beginning, that, I know that, having a stock alert service, a lot of people love that kind of stuff. But really, it's not about that. You really have to also think about your own strategic portfolio positioning as well as your own risk management strategies. And again, that's why I focus on, not giving you all fish, but teaching you all how to fish, how to manage risk, how to manage a portfolio. That way, even if I don't take a play, even if the reward to risk makes sense to you, go ahead and take it. Okay, just because I don't take it doesn't mean it's not a good trade. It just means, based on my positioning, it may not make sense because I'm already positioned that way, and I don't want to add any more to it, right? So again, that's the importance of, I think, teaching you all how to trade rather than just giving out alerts. But that's the whole idea behind this anyway. But yeah, anyway, I just wanted to share that. Just because I don't take the trade doesn't mean it's like not good at that level or something. You also have to take into account my existing positioning is very different than your existing positioning. So also factor that into your decision-making process, okay? Yeah. But it is losing its highs. So maybe Ari does have something. You know me, guys. One of my biggest weaknesses is timing. Everybody got their strength and weaknesses. My strength is data and options, okay, derivatives, and macro, and how things are tied, and quantitative data. That's my strength, okay. My weakness is timing. I'm like the worst timer in the world. I'm always too early, or I never get in because I'm too patient. I'm either too patient or I get too early. And that's why I trade the way I do. That's why I always look at 6-month spreads. That's why I look at spreads. That's why I try to use options and more of the mechanics of the market in my favor, because I know, I have my own shortcomings, and this is how I handle my shortcomings. So everybody, you guys have your own shortcomings and you guys have your own strengths. So keep that in mind. Maybe you decide to do a different type of play. I know Ari's going for more of a day trade kind of a thing. I don't know what you guys are planning on doing, but for me, I like 89 for like a 3-month put spread, and we hold it for a couple of weeks. That to me sounds extremely good play. So that's just me. I mean, it doesn't have to be news driven, right? I mean, we got some big events coming up. We got the ECB meeting. I mean, look at history. Okay, guys, I said this in the high noon highlights, but look at history, bro. Look at what happened last time. Let's go back to our SPX chart, okay? And this is actually a great. It's like 8:15 a.m. Eastern time, so it's about an hour and 15 minutes before the market opens. Yeah. Yeah, and last time it was crazy because right after the ECB, the Swiss central bank made this surprise announcement, and it just made this dash for cash. But if you remember, June 9th was that ECB meeting. Look at what happened on June 9th during that ECB meeting. Boom, 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 right? Don't you think institutions or traders are looking at that and be like, oh, well, last time it was a doozy, you know? Don't you think they would want to hedge? Look at VIX, man. VIX is going up. What does that mean? You know what this means, Nunya. What does this mean? When VIX is going up, that means people are buying options. Exactly. People are buying options. Exactly. People are buying options. People are buying put protection, right? On a SPY, on an SPX. That's what people are doing right now. That's what this means. So market is telling us everything. People are scared. They're hedging. They are hedging. Okay? They are hedging. Not only are they hedging, they're also going to cash. They're hedging with options and taking some money off the table. Okay, that TINA concept is no more. There is no alternative. There are alternatives. The dollar is an alternative. It's in an uptrend. It's cash. Okay, dollar's in an uptrend. Risk assets are in a downtrend. When that happens, the dollar becomes an alternative. Interest rates are at decent levels. I mean, I know, you know, most of the people here are kind of young, and you know, when you say 3%, you know, the young people scoff at that, like, oh, you know, they look at that like that's, you know, too bougie for them. But you know, the 10-year right now is around 3%, which is for institutions, that's actually a decent yield for them. So they're going into treasuries, they're going into the dollar, you know, they're going into these kinds of assets now. So there is an alternative. So there is going to be a demand to hedge. Okay, it's not going to be, even if we do rally from here, it's not going to be a straight line rally. It's going to be like shark teeth rally. You know what I call shark teeth rally, up and down, up and down, up and down. But you know, generally a upward sloping line. Even the next bull run for the first like month or two is going to be choppy like that. Although I do think just from the options positioning data for next year, it does look like we might have this low volatility kind of like grind up, just like 2017. It's the setup is there. That's just an opinion for now. I don't have confirmation of that, but it looks like the data setup is there. The way the options market is set up right now, it looks like we might have a 2017 style year, which is actually going to be good for people like you, Nunya, who love to day trade calls, like get in and out, like in the beginning of the day, get out at the end of the day. It's going to be your environment next year, I believe. Okay, day trading. And I did day trade. I made a lot of my initial bankroll also from day trading in 2017. In 2017 and the second half of the year, I would buy calls at the open, sell after 2 hours, wait 2 hours until end of the day and buy calls again and hold them overnight and sell them the next day. And that I rinsed and repeat over and over again. And I made a huge rate of return that year from that. And I think that will return. We will have this rolling bull market starting next year. And those types of day trading will have an edge. So our strategy will pivot if we see that happening. Okay. Again, we want to see that confirmation before we start switching over strategies like that. Okay. So Keep that in mind, just like chess, if your opponent starts moving pieces a little bit differently, you might have to pivot your strategy, right? It's the same thing. If the market conditions change, if the market dynamic, the structure of the market changes, our strategy is going to pivot as well, but not yet. Okay, so I don't want you guys hearing this and just start day trading like crazy. Okay, don't do that. Okay, we're not there yet. Okay, but I do see that happening sometime in 2023. I think that might happen. Yeah. Anything else, guys? Did that answer your? I'm sorry. I was supposed to look at something for somebody, and I just like went off on this tangent. Oh, I did. I did do a TSM. Okay, I don't even remember. Yeah, TSM. I said 89, right? I'm actually. You know what? I'm gonna set my alert. I'm gonna set my alert for TSM at because I think that's a great trade, shorting TSM, but I want higher levels. Oh, TSM is already regaining some of its losses. So again, I'm not trying to make fun of anybody's indicator, but that's just one indicator. And even for me, like look at my indicators, like the bond market, options data. These are all just one data points for me. So I look at like 10 to 20 different data points, right? I think it's important. It's important that you guys. Shit. What did I just do? Oops. That's not good. 88. Let's call it 88. 88.75. Once it gets over 88.75, I'm gonna get an alert and I'm gonna start looking at some spreads. Is it curling down? Is TSM curling down right now? The Bollinger Band. No, it's still kind of up, but it looks like it might want to curl down before. You know what? Maybe I set my alert a little bit lower just in case if that Bollinger Band starts curling downward. I might want to set my alert. Oops. I'm going to set my alert a little bit lower. Huh? Oh, shit. Why didn't I think of that? Oh, why didn't I think of that? Damn. Yeah, work smarter, not harder, right? I like the way you think. I like the way you think. Let's see, man. Alert last, bid, ask, mark, vol index. I know you can do volatility on TOS, and I do that frequently. I actually set volatility triggers. Alas, it does not have a Bollinger Band. It does not track a Bollinger Band. Or it doesn't have any study. I just see volatility. I only see volatility studies. But I don't see, no, I don't see that. So, okay, well, I mean, this is going to have to do. And I'll just have to check on it a little bit regularly. Let's say 88. If it's over 88, I get alerted. Yeah. Yep. That looks like a good play, actually. I like that. 89, and then we just boom, baby. That looks like good. Again, like if I wasn't in FXI or EEM, I'd actually start legging in now, like little bit. Huh? Look at setting up Bollinger Band. Oh, what? What? Hold on now. No, that link is dead. It says, "Yikes! Something went wrong." That would be. What? I got rickrolled. Yeah. What if that link? Yeah, that would be so. Got rickrolled on that. Yeah, that'd be funny as fuck. Damn, you guys are getting better. Look at space, dude. fucking taking profits, man. So are you. You're also taking profits, Nunya. You guys are getting better. That's good, man. I'm glad. I'm really glad you guys are getting better, and you guys are growing, and that's good. Dude, I know, dude. Hey, man, like everybody goes through that. I mean, that's like, I think the two hardest things, even for like experienced traders, is like when do you take profits, when do you cut losses. It's like you could literally like three different no, you could have like 100 very successful traders, and they will all have different opinions on those subjects, and each one could probably write a book on when to take profits, when to cut losses. It's like it's one of those like sciences that's also an art. um it's not easy. It's not easy. Okay, anybody who says this shit is easy it's just like kidding themselves, or they're trying to sell you something. Or it's usually it's not easy. Oh, what is this? Han Tech. Okay, they're gonna put some cookies in my computer. Fine. Here's the think script on. Oh, think script hackers. What? Providing code. Huh. Okay, I'm gonna have to look into this. I might have to do this. I'm gonna have to do this. Thank you, MSC, for that. I'll look into this. I'll try to put this in. I'll try to test this out. That looks pretty cool. If I can use a Bollinger Band. I wonder if there's a way to place an order based on a Bollinger Band getting hit. The last link has a script for an alert. Yeah. So it should be possible, right? Theoretically, yeah. It'd just be a little bit like a code change, like a one line, yeah, just a little syntax change, right? Yeah. Oh shit, dude. Holy shit. This actually looks pretty cool. Okay, I might have to look into this. Yeah, thank you for that. Okay, I'll definitely look into this. Yeah. Damn, that takes a lot of work out. Oh. Yeah, so though I do know there are some like, those quote unquote um like stock gurus, those the influencers, they sell some of this stuff, these think scripts. um they will give you certain think scripts for like a certain price. A lot of people also do this with trading view. Trading view also has like scripting as well, and you can make your own like indicators, and you can actually share them with certain people, or restrict it from certain people. But they do sell it. Yes. Yeah, well, those are just, I don't know if you guys know, but those are just like those were just like moving average like indicators. Yeah, it was just some. Yeah, but Bollinger Bands are also based off of moving averages too. It's just standard deviations away from a certain um, moving average. But yeah, all those are usually very well known. You know, yeah, that too. And there was, I looked at that, and there was a lot of copy and pasting. Those are not originals. Yeah. There are some people who do make original indicators. I do know a few ex pros who do that. they won't share it with anybody. They won't even, even if one were to pay for it, they would never share it. I know some people who do that kind of work. Extremely bright. But yeah, this could be a new thing for us. Maybe we do some scripting, and of course, if I do any of these scripts, I'm just gonna give it out for free. I'm not gonna charge you guys for this. So if I do anything like this, I'll post it, and you guys can use it and improve upon it freely. And if you guys do decide to improve upon it, hopefully you guys can share it with the group too, so that maybe somebody else might be able to improve upon what you improved upon. Yeah, isn't that what open source is? Like everybody just kind of contribute. Yeah. Oh yeah, GitHub. Yeah, dude, we can put it on GitHub. That's even better. I love that. I love GitHub. GitHub's wonderful. It's a wonderful fucking thing. Yeah. Yeah, that sounds like an awesome plan. Actually, we should really do that. We should really think about making our own like scripts and stuff. Guadalupe. Yeah, Mitch. Mitch is the man, dude. He's the man. He's in school though, man. We can't ruin his school. He's a young he's a tender young age, man. We gotta make sure he does well in school. Oh, that's true. Hey, that's true. Hey, if you can trade your own indicators and they're very good, hey, that's true. That is true. I don't know how his parents feel about that though. I don't think they would agree though. I don't think they would agree, but I think yeah, he. Oh yeah, that's true. That's true. Or it's really cheap. I think school is really cheap for them. But oh wow, damn, that's like 400 a semester. That sounds like one of these like stock guru plans, man. Like it's like 400 for 3 months. Like 400 for 6-month plan. Yeah, like. Dude, I saw this one dude, and like in order to be a member of his like thing, they don't even have a monthly plan. You have to pay a lifetime subscription. It's a one-time fee, but it's $5,000. I was like, who the fuck is gonna pay you $5,000 to listen to you, man? Like, I don't know. He's got some good ideas though. I'm not gonna lie. I know the guy personally, and he does trade very well. But oh man, that's a lot of trust. That's a lot of trust to be putting in some $5,000 up front. There's some crazy stuff out there. Definitely some crazy stuff. Well, yeah, but I mean, this guy, he just does it all with strangers on the internet, and he just like, um, he just charges $5,000 for a lifetime membership, and I think a good number of people actually did it. I think he told me he had like about 35 people who subscribed to it. So he made like 160 grand off of it. Um, what he doesn't tell his members though is that that's the most amount of money he's ever made. Okay, so that's that's the thing he doesn't tell his members though. But I know that's the biggest payday he's ever had. But good for him though. Good for him. Good for him. That's crazy. That's what paid for his portfolio. That's funny though. Let's see. Yeah, okay. So right now it looks like TSM is coming up. I don't know, man. 89, it seems kind of far, but I think it's still doable. I hope I don't miss out. It does seem like a good trade. Dude, being cautious is a good thing, man. Hey, wait, LT, hold up. Since you're here, hold up, man. We gotta look at gold, man. You know we gotta look at gold now that you're here. You know this, right? Oh no. Oh no. Actually, bro, I actually thought that was a good play when you went long on gold. I actually thought you were gonna make some money on that. It's going against you today, but not by much. It's only 0.5%. you got December calls, right? Oh, dude, you got time. You got time. But definitely, for gold and metals, you definitely want to see the Australian dollar. Like here, look at my Australian dollar chart. Here, I'll hit record real quick. Hold up, I'm record. Okay, okay. So none of your voices are being recorded. Just my voice and my screen is being recorded, just so you all can see this later on. Right here, these green lines. You want Australian dollar to pass these green lines. Okay, so I'm gonna post this up too, so that you can copy this chart, copy these lines. I know. I know. I'll post this up so that you. I know you're working, so I'll post this up so that you can copy these lines later on. But basically, for gold, like if you want to add to your positions, I wouldn't add until Australian dollar gives us a confirmation by closing over these double green lines. Okay, so here are the levels for those double green lines. And I'll post this video also too, so that you could just copy this straight up. Just copy this, okay? Copy this chart. I mean, wasn't our plan to wait for a pop and add to put positions? Wasn't that our original plan from weeks ago? And now that the market has popped, people are like losing that vision. Yeah, and then you know what? And that is very common in bear markets. People think it's over, and then it's not. But I will say this. I will say this though. This bear market has been particularly difficult. I mean, the data changes so quickly. I mean, even the end of May, early June, it looked like the rally was gonna have some legs, like maybe last a couple of weeks. And June 9th just completely obliterated that dream. Okay, and so it's kind of like this too. Oh, actually, speaking of like quick changes in the market, again, something I didn't go over in the high noon highlights. Dummy me. Here is the Fed FOMC highlights. Not the highlights, but the FOMC, the target rate probabilities. Look at how quickly this changes, man. Look at how quickly this changes. So this week, today, it's 69% of a 75 basis point rate hike. Last week it was at 82% for 1%. Over the weekend, I think Bullard and some of the other Fed governors got on TV and they said, oh, well, we may not have to tighten as much. It may not be necessary. And when they said that, boom, over the weekend and next few sessions, odds just flipped. And like in the old days, like even 10 years ago, this kind of shift took like weeks. Now it just takes like a few sessions. No, it's for 75 right now. It's a 69% chance of a 75 point basis point rate hike. I don't. I agree with Nunya. I actually think the earnings guidances might cause a little volatility more than anything else. Yeah, but you got to understand too. Netflix, they said that they were gonna have 2 million. It's an old Wall Street trick. You make the outlook seem way worse, and then you come out with better than expected numbers. Yeah, but look at Netflix right now. It's already lost like a lot of its gains. Like it already came down 2% from its high. Yeah, I wouldn't, dude. Like I wouldn't be surprised if the next couple of sessions it gets down to like lower than where it was pre ER. I wouldn't be surprised. You know. Oh, that's right. That's right. You went short on Apple, right, last night.